Is everyone here? We're going to get started with our next panel. Our moderator is Barbara. She's from Unicorn Growth Capital. We have 40 minutes for this. We'll leave a little bit time at the end, but blockchain, world-changing uses cases born in Africa. Thank you.
Hi, everyone. My name is Barbara Yayi. I'm the founder, managing partner of Unicorn Growth Capital, a VC firm that I set up focused on investing in companies building the future of finance. So I've always looked at the future of finance as open, embedded, and decentralized. So blockchain is a really important part of the next generation of fintech, essentially. I would love for everyone to introduce themselves just briefly, and then we'll dive into questions.
Sure. Hi, it's great to be here. Thanks for having me. Jalak Jobanputra. I'm founder and managing partner of Future Perfect Ventures. It's a fund now based in Miami that I launched in 2013 to invest in decentralized technology. So we invest pretty much exclusively in the blockchain and crypto sectors globally. Always believed that this was kind of a cross-border, borderless technology. I've been a VC since '99. And was a tech and telecom and media investment banker before that in New York and London.
Cool. I'm Chris Murray, CEO of Yellowcard. We are the largest crypto exchange on the African continent. We operate in 16 countries and serve businesses across the entire range, small businesses all the way up to large businesses with treasury management, access to dollars, hard currency, things like that through crypto. Yeah, I met a Nigerian guy on the internet that told me to do this, and now I'm here.
I too am Chris. I'm Chris Duffus, founder CEO of PhoneBank, and we provide non-custodial on-off ramps to and from Web3, targeting mobile-first, cash-based economies using prepaid airtime and mobile money as mediums of exchange. So think Uniswap meets M-Pesa.
Hi, I'm Emily Chu. I'm the Chief Operating Officer at TBD, which is one of the 4 business units at Block alongside Square and Cash App. We founded TBD 2 years ago, and we're currently building a developer platform that's focused on bringing the benefits of decentralized technologies to builders. So that ranges from decentralized identity technologies to decentralized finance protocols, and really excited to be here today.
Morning, folks. My name is Kirill. I'm the CEO of Conduit. We're an API platform that allows developers, fintechs, and neobanks to integrate on and off ramps for crypto, wallets, custodial solutions, ledgers, and tokenized assets as well. Our essential thesis around this is that fintechs, neobanks want to build products that, to their users, to the end user, look very seamless and don't actually have to expose all the complexities of blockchain. And that's what we're helping them do.
Thank you, guys. We have a really great panel today. Different perspectives, venture capitalists, infrastructure providers, and then platforms going after consumers directly. So would love to start by just taking a step back for a second. Last year, we had a really great panel discussion at this summit. I think it was around February, and we talked about how we believe that Africa is going to redefine crypto and be the leading place for crypto adoption and all of that. But then since last year, we've seen the world change, right? From FTX going bust to Luna crashing and the recent issues in the banking system. And then obviously crypto prices are down. So what is the narrative now? And how has Africa sort of been redefining this sort of crypto noise that's been happening? Maybe talk about it with your perspective and the use cases that you're working on. I'm going to start with you, Chris, because you found a guy on the internet, and you can talk more about that.
Yes. So I think the only problem with the question is that we're talking about it in the future tense. We're saying Africa will redefine the way that crypto works, right? Africa has already redefined the way that crypto works and is continuing to redefine the way that crypto works. And so I think when you know, again, just looking at sort of the different use cases here, right? And FTX and Luna were one very specific type of use case, which is, you know, more of like a Western user that they're buying crypto because they want the price to go up, right? If you're in the US and buying Bitcoin, you're buying it because you want the price to go up. There's not really another reason to buy it. If you have a US bank account, right? You can do whatever you want with your US bank account. Our users, for example, right, and the users on the continent that are actually using crypto, it's a completely different use case, which is payments, right? It's international payments, it's savings, and it's remittance. I live in a currency like the Naira, where, you know, inflation last year in Nigeria was over 50%, and I need something else. I need to be able to make payments. I need to be able to get my money, you know, to a usable state. And so, yeah, I mean, crypto has already sort of been redefined by the continent, because the continent is the first place that it's really being used practically, as opposed to as sort of a, I mean, you know, look, FTX was a casino, right? That's what it is, right? Binance is a casino. And so, yeah, you know, Africa, it's actually being used practically. It's being used the way that it was intended to be used, and that's you know, what we see.
So why don't you dive into cross-border payments? Maybe, Emily, you can talk about that. Payments is usually the use case that we all talk about. But how is your technology addressing some of the issues with payments in Africa, whether it's interoperability, lack of liquidity, fragmentation? What is unique about what you're doing that's going to solve these issues?
Yeah, we're so excited about the opportunity in Africa because there is so much of a lack of interoperability. Moving money even between countries that are adjacent is so expensive and inefficient. You know, we were talking last night, Barbara, about how you took the train down from New York to DC. Had Amtrak routed you through Toronto and then charged you extra, you'd probably have some complaints. And yet this is the state of routing money, where if you're trying to send money from Ghana to Kenya, they might route it to the Europe or to the US, and it's completely inefficient, going through multiple intermediaries, making it expensive and making it inaccessible to people. And these are all the challenges that decentralized technologies solve. In particular, we're partnering with Yellow Card. They're helping us with facilitating a lot of the last mile off-ramps into mobile money wallets, into bank accounts across 16 different countries. And what we're doing is building the full on-ramps, as well as leveraging everything from stablecoin to Bitcoin and Lightning technologies, not as a mode of speculation, we've all gotten out of the casino, but really for its pure utility, because it facilitates 24/7 borderless payments. And as we leg into that to our bigger vision, which is TBDEX, we're building a global interoperable protocol to move liquidity around the world. We will be bringing liquidity into these markets by serving as a liquidity node ourselves, and we're building this protocol that anyone can plug into. Other exchanges, other liquidity providers, other wallets, and that becomes your borderless way to send money around the continent in a seamless way that leapfrogs all of these traditional incumbents that are inefficient and are driving up the cost for people that can't afford it, really.
And you know, when it comes to getting more users to use this technology, what are some of the interesting ways and to do that? So Chris, you're with FundBank, you know, you're addressing the last mile issue. How are you doing that to drive adoption?
So probably the most ubiquitous digital asset that you don't really think about are the prepaid airtime or the billing credits that you get from your mobile carrier when you top up. And most people don't realize this, but there's like 8 billion prepaid SIMs globally, and they over-index across the global south. And it's more easy to top up your mobile phone than it is to maybe buy some potato chips or a gum or something like that. And probably one of our investors explained it when his thesis for investing in us was like, he's backpacked across sub-Saharan Africa and certain parts of Southeast Asia and LATAM, and the only thing nearly as ubiquitous as being able to top up your mobile phone is buying a Coca-Cola, right? And so we use this asset in our DEX as a medium of exchange, and we also use it as a user acquisition currency. we grow a few 100,000 wallets a quarter by giving out this as the incentive. And we're even using this as a type, we've productized this. We're actually the lowest cost airtime reseller on the continent because we resell it. And we've aggregated our this pool and we sell it back to firms like Western Union or other app developers who do cross-border remittance using prepaid airtime as a service. And it's been really effective for us. And unlike traditional cryptocurrency type incentives or other digital incentives, people can actually consume a unit of, prepaid access or top up versus they can't eat Bitcoin.
So it's an effective off-ramp for, providers like what you're doing, Emily, and Yellow Card. Krill, you work with a lot of players in Latin America that have off-ramps and you help with liquidity. What are some of you're now exploring Africa, like what are some of the opportunities and what is your approach to Africa that you're going to take?
Sure. And the thing that we've seen in Latin America in places like Colombia, Argentina, Venezuela, et cetera, are essentially inflation, right? So you have really high local inflation. You have local currency like Argentinian peso that's experiencing, I think right now, 98% inflation, something like that. And people in these regions want to get out of that, right? They want to be able to actually save their kind of hard-earned money in something that's more stable than that. And so what we're able to provide for them is stable coins, right? So USDC primarily, but also other ones. And that allows them to essentially hedge against their local inflation and have access to US dollars, which otherwise they would not have. And the reason that we started looking at Africa, right, is because we realized, unfortunately, a lot of the countries on the continent have very similar problems. Inflation, local currencies that are devaluating, and really high demand for harder cash, so to speak, right? And at the same time, you have this inability to actually have access to these assets, right? You can't just go get dollars a lot of time. And so that's what we're able to bring. That's what we're hoping to bring to Africa as well, is access to more stable currencies. And then on top of that, also access to tokenized assets, which maybe we'll talk about later, which are also really interesting for a lot of people in Latin America, and imagine will be the same case in Africa as well.
Yeah, no, that's a great point around other ways to bring financial services on chain. Jalek, so you look at, obviously, as a venture capitalist, you're looking at this ecosystem broadly. Why are you, what are the venture opportunities that you're seeing in the blockchain in Africa? And why are you more willing to invest in these blockchain opportunities in Africa versus maybe other markets?
Yeah. I'll back up. I was actually born in Kenya, and when I was with Omidyar before I started my fund, I was in charge of making mobile investments in emerging markets. So spent a lot of time in West Africa, East Africa, Southeast Asia, Latin America, and started to look at some of the similarities between these markets. I'm also Indian. I've historically spent a lot of time in India also. And it just became clear, and I guess we call it the global south now, but this, not only are the demographics in the favor of, continents like Africa, but this is where, all the growth and the GDP is, I think the BRICS just surpassed the G7 in terms of GDP growth. So 10 years ago, I was thinking about all these trends, and if you look at the most underbanked, it really was the continent of Africa, and I thought that created a lot of opportunity as we started to see new types of financial services that were much lower cost than the legacy systems we have in the West, and obviously M-Pesa is ground zero for that. But in 2013, we led an investment in BitPesa, which is now called Aza Finance. And they were one of the first companies to take a look at this, the infrastructure behind blockchain technology and say, we're talking about correspondent banking and having to move money off and on shore to be able to get from one country to another within Africa. And so Elizabeth, the founder, looked at it and said, we can just use one blockchain transaction to do that. And so that was like a big eye-opener in terms of, like, it's almost like you can throw a dart, and like the amount of underserved people and products in Africa is pretty astonishing, and that's where the opportunity is. And, I was saying, like, even in India, like, women would get gold for their weddings, or that's what you buy, so they have an asset for themselves to bring with them. Now, wouldn't it be better to have, like, a piece of a coffee shop, or some Bitcoin or some crypto, some assets, and that's where the opportunity really is. And I think in the U.S. we're seeing, we also invest in the U.S., but we're seeing so much regulation here because there are just power structures in place. Now, that's not to say regulation does not exist, as you all know, and we've made 4 investments in Africa so far, and so there is regulation, but I think we've seen a turn in terms of, like, governments do want to see these countries grow, and when you have a young populace that wants to create these better lives and find things to do, that is a very different dynamic than an aging population that is just used to doing things a certain way.
Yeah, no, you've brought up regulation. We have to talk about it. So I'm going to start with you, Chris, on that. But I would love to get your thoughts on, we talk about regulation in different countries in Africa, and it's all very different. Nigeria has a strict ban on crypto with respect to the banking sector. But then you have millions of users using crypto. So how does that work? How are you dealing with regulatory restrictions, but then how is your user base growing at the same time?
My sister, that's a dangerous question. Are there any regulators in the room? That's fantastic. I think the long and short answer is that crypto is a totally new technology, right? And with any new technology, there is a new regulatory regime and infrastructure that needs to be put in place. And Nigeria, despite sort of the sort of misconception out there that crypto is banned in Nigeria has actually done a relatively decent job of putting this infrastructure in place. The problem now is just the infighting, right? Where the CBN and the SEC and the vice presidency and nobody can get along, right? In terms of who should be in control. But
sounds like the U.S.
Yeah, exactly. And so with Nigeria specifically, the CBN's not a fan of crypto, but it doesn't matter because the CBN's not the one that regulates crypto. The SEC is, right? And so the SEC has put out licensing guidelines for crypto in Nigeria. We work with the SEC, et cetera, right? And it's the same in other countries, right? I think there's a lot of noise around crypto regulation in Africa that doesn't actually mean anything, right? So, for example, in South Africa recently, the government declared Bitcoin or crypto as currency or as a financial instrument, and they said that banks can work with crypto and everything. None of that matters because the government agency that did that is not the one that actually regulates crypto. So it's literally just talk, right? And so it's had no actual tangible impact. Banks are not listening to it because the banks have their own regulator that they have to report to, right? And so I think something that our team has done really well and that we did in Botswana, for example, is we actually go in and we sit down and work with the different regulatory bodies to develop that regulatory system for the country. Right, and so in Botswana, we worked with the Bank of Botswana, and then we worked with MBFIRA, which is the non-banking financial regulator, on what do smart crypto regulations actually look like, right? And so basically, we took what the U.S. does and said, don't do this, and that's basically the starting point, right? And you work with them on, not just what do those smart regulations look like, but then who should actually be regulating it, right? How do you prevent this infighting? Who is actually in control of it within the country, right? And yeah, eventually you get that to a good place, right? So now Botswana actually has a crypto license that has been issued and that kind of thing. But I think what I like to say is that regulators are people too. And, it's just about education, right? Most of them don't really understand the crypto space. They don't really understand the technology. And so it's really more about going in and talking to them than it is about trying to avoid the regulation as it exists.
Yeah, and the reality is people are going to make rational decisions. If they need to hedge against, inflation, if they need to, not have their currencies devalued, they're going to do what they need to do. So whether the governments like it or not, and so that's why you guys are seeing the adoption that you're seeing, right? But how are we, policing ourselves and creating structures to ensure that we're protecting our consumers? So, for example, one of the reasons why I see a lot of global financial institutions not partnering or working with fintechs and companies in Africa is because of AML or KYC issues. What are we doing on the blockchain side to address some of these issues? Anyone, please jump in. Emily.
Yeah, I'm happy to address that. I think there's a couple points here. The first one being, the more we're able to demonstrate real impact, positive impact and utility through the use cases we've all been talking about, from helping people guard against currency inflation to helping people get more access to the financial system, helping people move money much less expensively across borders, the more we'll have tangible examples that we can bring to regulators to help them understand the positive benefits of the technology, not just the blow-ups that we've been seeing in the last year that's shaded and colored the whole space. The second piece is regulations. Once they're clear and clarified, there needs to be a way to accommodate that if we really want something borderless and interoperable. And that's one of the reasons why, as we've developed our TBDEX liquidity protocol, which is a global protocol for liquidity to move across borders, it was really, really important for us to first build it with a trust layer. In order to make things interoperable and simple and to abstract away all of the complexity of moving money across different regulatory jurisdictions, you have to solve really hard problems around trust, right? And it really comes down to, can I trust that you are who you say you are? Can I trust that you are not facilitating terrorist financing, that you're not from a sanctioned country? Can I trust that you are a counterparty that I want to transact with? And there's many DEXs out there that have done a phenomenal job of innovating and facilitating atomic exchanges between different pairs of crypto or digital assets. However, what has not been there is a layer of trust where you can actually facilitate digital assets to fiat, which is regulated, or vice versa, or digital assets into physical things. Like if you want to sell me your house for Bitcoin, I better know that you are who you say you are and that you have title to your house, right? And so with our Web 5 trust layer, we finally create the conditions in which you can know who your counterparty is. You can start to build amazing risk management systems that could create greater access for people you had to previously deny, or bring down the cost of the system because it was previously risk that you had to price in, right? So we see things like risk, trust, and identity as very core to being able to create that access and to fulfill regulatory guidelines. And lastly, in our protocol, we've built in fields such that people from different regulatory jurisdictions can say, hey, I'm in the United States, I'm regulated by the BSA, in order to fulfill KYC, I need these 4 required fields. They can transact with someone in a different regulatory jurisdiction that might have different requirements, but the messaging protocol allows for everyone to negotiate the level of trust and compliance that they need in their own regulatory jurisdiction. And that, for the first time, unlocks compliant cross-border flows, no matter what jurisdiction you're in.
I would actually add a little bit to that, in the sense that I think there's a misconception that somehow it's actually easier to launder money in crypto. That's not the case, right? It's actually a lot easier to do it with cash, right? So like physical cash. Because by its own nature, like a blockchain is traceable. You can actually see where the asset has been since its minting, essentially, right? Whether that's Bitcoin, whether it's a stable coin, anything else. That's much easier. It's much more transparent on chain than in any physical form, right? We were recently talking to a large global partner, I'm not going to name, and they told us a story about kind of doing an experiment with a stablecoin, and they partnered with Chainalysis, I think, and they realized that a particular token has been touched by like an Iranian exchange, 3 years ago. I'm like, all right, fine, but who has the coin now? You have the coin, right? So like you own this. And if you would apply the same standard to dollars, like actual physical dollars, you would have literally $0 in circulation because something like $4 or $5 bills have cocaine on them, right? So like, it's true, look it up. So the standard is actually much, much higher in crypto, right? And if you really want to launder money, don't do it in crypto as an advice, right? Just go to cash. It's a lot better.
And I add too, in that the medium of exchange we use, prepaid airtime, in order to get your SIM card issued by that carrier, you have to go through a KYC process with the carrier. In order to get a mobile money account set up, you have to go through a KYC process. And in many respects, that concept is really Western, a vestige of sort of post 9/11, and it's expensive. And in many parts of the world where you don't have a traditional addressing system, right? Like, how do you know it's like a real person? You're not gonna, you're not giving them credit, like they don't have a FICO score. And so we've sort of inverted that, and if you can get access to a cell phone, you now have a type of verification process that has gone through at least a GSMA treaty, KYC process recognized by the Western world, and that is widely available and accessible across the global South, specifically Sub-Saharan Africa. And we've invested a lot in terms of the filtering, so it can't be spoofed. You can't use a landline. But I think as this sector evolves, in addition to the chain, you're going to see a lot of these identity capabilities sort of baked into the stack, and that's just part of doing business. And oh, by the way, it's free, right? Some of these KYC services can be tens of dollars for certain types of accounts, which again make most of the types of transactions that you see in Sub-Saharan Africa not profitable if you can't leverage some other type of stack or capability to access that.
Yeah, I'll add on to sort of what you said, which is that banks and big corporates sometimes have problems working with African fintechs. And how do you establish that trust? The answer that nobody wants to hear is that African fintechs still have a lot of work to do to get it together on a legal and compliance side, right? And we've worked with a number of companies across the continent. Most companies don't really have it together, especially on the compliance side. And it is critical to be able to move the continent forward, that we have to have big companies, we have to have investors, et cetera, that want to come in, and good legal and compliance framework is the baseline for that, right? Just from investors that we talk to, that's like number one or number two on their list every time is, let's talk to your compliance officer, and it's so critically important, right? And there are a lot of different resources out there, right? Obviously, TBD's doing a lot of stuff with decentralized identity and everything now, and that that technology is becoming more and more prevalent. But there are a lot of resources out there that are not extremely expensive for companies to be able to do things like sanction screening and be able to do things like basic compliance checks. And yeah, I just think in terms of how do we push things forward? How do we get it to the point where banks and others actually do want to work with fintechs? There needs to be that culture of compliance if you're building a fintech, right? And it's hard and it sucks, but you didn't build a fintech because it was going to be easy. So.
Yeah, the technology is only so much. You have to still protect what you've built. There's so many, there are risks, but there are opportunities, and it's how to manage them. Somebody would say, people sometimes think this is a bit counterintuitive to sort of say that, there's so many scams going on the blockchain, but then it's also transparent. So, for example, the recent Silicon Valley Bank collapse, a lot of people were saying, what happens in the crypto world if there were issues with your funds? You don't have the government stepping in. But we learned from that experience, about transparency in general, right? What would you say about that, just to give people a better understanding of what this blockchain does in sort of a banking ecosystem context. Anyone can jump in.
Leverage is bad. And
Brief answers, because I have to.
no, I mean, I think what the SVB issue was a window that they couldn't borrow from the Fed, and there was a run on the bank, and that sort of timing gap turned them insolvent. With the blockchain, 24/7, 365 accessibility, you don't have those types of issues, and it's transparent. You know the money is. Like, that was actually one of the big issues with Circle, which had $3 billion there, and a partner of ours. They knew literally that $3 billion addressed 7 cents of the total, net asset value of Circle tokens. You don't have that in traditional financial systems.
Okay, I'm going to open it up for questions, unless anyone wants to comment about anything. Okay, because I know we have like 5 minutes left, right? Any pressing questions on Africa blockchain opportunity? No? No?
What's the solution to that problem set if it's Western and we're not interested in doing things like WorldCoin, we can't leverage what the iPhone's done for, identity. What is the platform that succeeds in frontier markets?
What is the platform that will succeed in frontier markets to address KYC, this connective and identity?
Yeah, I mean, I'd love to hear from you guys that are on the ground there, but I think this notion of privacy, and you mentioned WorldCoin, and and historically, Facebook messed up in India, but or was it the continent? I can't remember, where they're like, we're going to give free access in return for data, right? We need to get away from that. And I think there are more technology-based solutions. Zero-knowledge proofs are still very much in their infancy. But we really need to stress the importance of privacy here. To me, that's a very important piece. And I'm worried about what's going on right now with CBDCs around the world. And I don't think there's enough discussion on that. With that, I'd love to hear it from some of the operators.
Yeah, the only thing I would say on KYC is that right now African regulators apply very strict standards for KYC that often match sort of the default in the West. And Western KYC standards don't make sense for the continent whatsoever, right? Like, proof of address isn't really a thing in most countries, right? And so it really comes down again to working with those regulators. And yeah, look, to some extent, right? I think we've all talked about how, like, African fintech is really early, right? It's our job, being early into African fintech, to actually work with these regulators to make it easy for everybody else, right? And yeah, and it's, for now, the standards just don't make sense for the continent, applied by the regulators on the continent, don't make sense for the continent. And it's really about working with them, right? It's about working with them to make sure that they understand that, hey, proof of address should be like a WhatsApp location or something, right? It shouldn't be a utility bill, because most people don't have a utility bill in their name. Right, and so it's really about that regulatory engagement and working with them to make that happen.
You have a question? Yeah.
Okay. So, and I heard conversations earlier. Given the liquidity challenges that you would have for any crypto outside of Bitcoin, do you guys see a future as you think about crypto, or is it Bitcoin only as it regards to Africa? And maybe stablecoins.
So actually, I think the killer app is our stables. One of the conversations I heard earlier was that Africa probably has the largest dollar shortage on the planet, and as you think about trade, stables are really an efficient way to access dollars or euros or yuan, prospectively. And I think now with Lightning, you're going to see a lot more stable activity on the Bitcoin network.
Yeah, I think that I agree with that, and I would say there's probably three things on chain that are really useful. That's Bitcoin, Ethereum, because you can build on that, and stable coins of various kinds. And we see a lot of activity in stable coins in Latin America, where people create local stable coins, right, in Brazil and Argentina. I'm sure that's going to be the case in Africa as well, because that allows you to have a currency that can trade against USDC, can trade against other stable coins, makes it a lot more portable, makes it a lot easier to move cross borders. So I think there's future in those three things. Everything else, we'll see.
We've done $2 billion since inception, and 90% of that is stable coins.
Yeah, I guess the question will be, will CBDCs be the thing?
No.
No.
You got your answer. Question? Okay, sorry, we have to wrap up in 2 minutes. So why don't you take that?
Yeah, so I think quick answer, why are people buying so much crypto is, would you rather Naira? That's why, right? Would you rather franc? Would you rather shilling right now, right? That's why people are buying so much crypto, right? It's not even just that, right? I mean, when you look at, there are a number of examples, right? Nigeria has basically cut off all foreign transactions. Malawi has cut off all foreign transactions. Kenya is cutting off most foreign transactions. How else are you going to continue to run a business, right? If I'm a business, if I sell shoes on the side of the road, how do I get those imports in from China or India, right? If I can't make a payment, and if you're trying to make a payment through the banking system in Nigeria, Malawi, Kenya, any of those countries right now, good luck, right? You go to the bank, you fill out the forms, and you pray to God. And and so crypto is the alternative, right? And crypto is really the gold standard in a lot of those countries to actually be able to make that happen.
On the point on KYC, I'll just add, we see a huge opportunity with decentralized identity to really help streamline the KYC process while fulfilling regulatory obligations globally. We're actually putting together a consortium where we're evaluating how verifiable credentials and attestations around who you are can really translate into not just fulfilling KYC requirements, but possibly making KYC portable. So you're not KYCing into every single thing every time, but you can build a network of trust that's verified.
Yes, and Barbara is going to kill me for going over time, but I would also say that the other reason that so many people are using it is because the traditional ways of sending money to the continent don't work anymore, right? And if you are sending money, you're getting a significantly worse rate because the banks and the central banks have set these rates artificially low for, again, I hope there's no regulators here, but generally for their own benefit, right? Look, Emily talked about the partnership that Yellow Card and TBD have, right? And that's a big part of it, right? Is that the old ways of sending money to the continent don't work anymore. People have already realized that. People are already in practice starting to use new age technologies like crypto, and so that's what we're going to help make easier across the board.
And there are other use cases we haven't spoken about, especially when it comes to ways to help businesses get more funding, tokenization of, illiquid assets. There's a ton of illiquidity in the market in Africa. How do you bring them on chain and create more liquidity, more opportunities for global investments? There's a whole bunch of stuff we haven't covered, which is why the next time we do this session, we need to increase the time. But thank you. Thank you very much.
Thank you, everybody.